Hello and welcome to Free World Investing. Today we're going to be going over the Awesome Oscillator and how it works. Now the Awesome Oscillator uses two different simple moving averages onto one oscillator. Now we use the 34 and 5 simple moving averages. The zero line the whole time is the 34 moving average, while this is how the 5 moving averages, the 5 simple moving average is with the 34 moving average. So when it's down, that means it's down by however much. The 5 cell moving average is down. So for right here, we're looking at the Euro USD chart, and we're looking at about negative 10 pips. Oh, negative 12 pips. So the 5 cell moving average right here is negative 12 pips below the 34 moving average. So all you really got to do is remember that the zero line is always the 34 moving average. And now I'm also going to make this chart a little bit better for you because the default is awful. It's using a histogram, which is okay, but the big thing is that the width of it is just terrible. So we're going to turn this into columns, and same exact chart, same exact details, just way easier to see. Now, a lot of times what this is used is to see when a 5 mark simple moving average is going above the 34 simple moving average. So whenever there's a cross, there is a chance for a new trend. So as you can see here, the 5 simple moving average was slightly above the 34 moving average for a little while. And then once it broke below that zero line, we go right into a downtrend. And now the red means that it's falling, and while the green means that it's rising. And because of the influence of the 34 moving average, sometimes it won't quite go with what it looks like on the chart above. But it's pretty good at pinpointing reversals sometimes. Right here, it was a little bit lagging on this trend, but we had a good pinpoint candle right here, which would have been a good indicator that it was about to switch sides and have a reversal. Let's go through a couple more examples. Like we can see it once again, it was ranging for a while, but once the ranging was over, we could see this big, nice trend coming on. And like this, right until even right here, we would have got, considering this is days, we would have got on that trade, 627 pips. And if you were trading with a 50% leverage, that would have been over 3 times your investment, which is pretty impressive. The big thing is sometimes you can get caught in ranging markets using this indicator, just like most other indicators. Now, if we look at it right here, if we would have gotten in, at the earliest. Oh, and a good thing to note is that when using these moving averages, the chart, the Awesome Oscillator itself does not use closing or openings, but it uses the midpoint. And look at this. Oh, gotta move it a little bit. Well, it was about 710 pips. And this oscillator works just as well on stocks too. Like we'll go look at Netflix. And if you don't understand how pips work, this might help you understand a little bit better about how this oscillator really works. So right here, we can see that it's coming above, the 5 simple moving average is coming above the 34 moving average right here. And so at the top here, we're at 60, about 60 pips. I'm not 60 pips, $60 above the simple moving average of 34. And now there isn't really a set amount to be overbought or oversold on this indicator, but you can use other determinations. So, say right here, this was a good middle point for these two, and you can see right here that if you would have used that as a support, a resistance line, that we could have got a good fallback right here on this one. We would have had to wait for the second jump to come down, but we would have got it right here. So we would have found a good reversal point right there. You can find good reversal points using the Awesome Oscillator if you're using it as support and resistance as well. So we can see right here, and then boom, if we would have used that as a resistance, we would have got a lot of pips right here. And we could have even closed out right about here, or we could have waited and closed out right here. This would have probably had a couple people stumbling right here, but we could see that it had a quick fallback. And this is sometimes this is actually uh, a good example of when the Awesome Oscillator sometimes will give you misrepresentative data, and is a good reason why you're supposed to use more than one technical indicator. You're always supposed to look at the charts. You can see right here that because it's using the 5 simple moving average, it doesn't really see that huge mark up that was right here. And sometimes that's okay, but when it's really fast and there's a high volatility movement, you might miss the fact that the trend is changing. But for the most part, this indicator works very, very well. It's a very, very good indicator to use on your charts. It's very it shows a lot of different movements, and it's a very simple to learn, simple to use. Every time it's green, that means that it's still moving up compared to the 34 moving average. The 5 simple moving average is still moving up, or is still in an up zone. And that could just be the fact that you can see this red candle right here. That means that since this is green, the 34 moving average probably changed because they minus the 1. So it still made it higher, if that makes sense. But that's all we're going to go over today about the Awesome Oscillator. And I hope you enjoyed the video. If you did, please give it a like and subscribe to our channel to check out more information about day trading and get more day trading tips. Y'all have a great day. Make sure to check out my other videos.